YouTube, and welcome back. Wanted to go through a quick video showing you the power of compound interest and how you can become a millionaire in less than 35 years. Now 35 years does seem like a long time from now, but if you just stick to this game plan, it's all but almost guaranteed that you'll be a millionaire in 35 years or less. So let's get started with the initial balance. We're going to use $5,000 as our initial balance, and we're going to set our interest rate at 8%. Now, over the last 50 years, the S&P 500, which is the kind of the health monitor of the US stock market, has actually returned an average of just over 11% for the last 50-year period. So if we see right here over the last 50 years, from 1972 to 2021, the average annualized return of the S&P 500 is at 11.17%. And that rate is then adjusted for inflation, and they have it hovering around 7%. But for the purpose of this video, we're going to just focus on the nominal amount. And with that being said, we are going to go below that 11% to give us some buffer on either side. So here we're going to put in 30 years, and we are going to contribute $500 to this each month. One thing to keep in mind too is we're going to do the compound interval of each year. So you can switch this into daily, weekly, bi-weekly, monthly, all these different things. We want to just focus on yearly. So this is going to compound each 12 months or each year. All right, and we're just going to say that the deposits were made at the beginning of each month. If you wanted to do it at the end of the month, you would just click this button here, but for the sake of this, we'll do it at the beginning of the month. And from there, all we got to do is click calculate. So I said a millionaire, and right now we're at $759,000. Our total deposits is $180,000 over the course of that 30-year period, and our initial balance was a first-time investment of $5,000. The reason I did this is I want to show you the power of the last couple years of investing. So this is why it's really important to get started as soon as possible in your investing career or in your investing in general. So if we pop back up here to the top and we adjust this from 30 years, our number right now is, call it $760,000. If we just add 4 years to that time and we do nothing different, we still contribute $500 a month and nothing else changes in our portfolio, congratulations. You are now a millionaire. You have over $1 million in your portfolio. All things considered, we have an 8% annual return. That's a yearly return. It's compounding yearly, and we're depositing $500 a month, which equates to $6,000 a year into this portfolio. So like I said, if we look at the S&P 500, on average, it's actually returned 11%. So let's go ahead and pop back in here and just see the importance of percentage points. So right now, over $1 million in 34 years. If we adjust this rate to 11%, assuming we get the same thing that happened in the past. Now, the past does not always dictate the future. Definitely something to keep in mind. But for the sake of this video, let's take a look at what the impact would be from going from 8 percentage points, so 8%, to 11%. It almost doubled. It almost doubled with 3% more per year in our interest rate. No, yeah, more than doubled. We're at 2.1 million. If I change this back to 8%, we're at $1 million, 61,000. That is the power of compound interest, and that is the power of interest in general, right? So from 8% to 11%, we double our investment value. That's pretty wild. So in order to get this 8 to 11% return, what do most people invest in? They invest in something called an ETF, or an exchange traded fund. So I'm going to show you an example of an ETF that tracks the S&P 500 index, and that is from Vanguard. Vanguard is a platform that allows investors to invest in low-cost index funds and or ETFs, as well as stocks. They're a brokerage service on the web. One reason Vanguard is super popular is their low expense ratios. So for the VOO ETF, your expense ratio, so what it costs you to be a participant in the ETF is 0.03% of the amount of money that you have in that portfolio. So another way to say that is, for every $1,000 you have invested in the Vanguard VOO ETF, every $1,000 is going to cost you $30 in order to be a participant of this fund. Actually, it's going to cost you $3. I did the math wrong the first time. It's going to cost you $3 per year to potentially get an 8 to 10% return annually and make yourself a millionaire in less than 35 years. I hope this was helpful. If you have any questions, please leave a comment in the comment section below. As always, I'm happy to help. And thank you again for taking a look, and I hope you have a wonderful day.